Hello everyone. This is the pre-market report video for today, 16th September 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First, a quick recap of what happened last week. If required, please pause and have a look. First 3 days it was range bound. Then on Thursday, Nifty had a breakout driven primarily by FII, and again on Friday it was on the range bound. Here one thing to notice, on Friday both Asian market and European market both advanced significantly because of the aftermarket event on Thursday night in US, which we will discuss in a moment. But Indian market didn't react for it, so we can understand there was a slight hesitation for the up move. Anyway, before last week, Nifty was down 1.5%, and for that last week it increased over 2%, so recovered all those last points. Future market open interest wise, FII increased their long position by 2% to 67% compared to 65% a week ago. Similarly, DII also increased their long position by 3% to 39%, but their majority open interest is on the short side. Whereas on the other hand, retail people increased their short position by 6% and proprietary traders increased theirs by 5%. So basically, from future market open interest perspective, retail people, DII and proprietary traders all expecting the market to fall, so their majority of the holding is in the short position against only FII who favors the market to go up. FII versus against all. Then moving to options open interest. In the snip, the highlighted ones are the changes in the stance compared to a week ago. A week ago at the end of 6th September, among the retail people, there was more call option buyers than the sellers. Then on the put side, there was more sellers than the buyers. Meaning a week ago, retail people's stance was market to have breakdown on the downside but range bound on the upside. Now for that, we know the outcome. Market had the breakout on the upside. So based on these data, looks like more retail people might end up in loss last week. But here, the one who correctly predicted this last week was proprietary traders, since they sold more call option and bought more put option. Hence, they might made money on both the sides. Moving on, nowadays, FII stance is mostly just constant, since their purpose is just for hedging. Hence, their stance is mostly breakout on either side. So, it's no difference last week and neither difference on before last week. Then, coming to last week data, retail people sold more call options as well as they sold more put options. Hence, now retail people betting on range bound. Whereas the proprietary traders bought more call option and sold more put option. Hence, their stance is breakout on the downside and range bound on the upside. I hope everyone able to follow me. If not, please pause and have a look at the stance table. Sector wise, weekly basis, FMCG, private bank, media and IT increased around 3%. On the other hand, public sector companies, oil and gas were the only draggers. About institution, in the cash market, both FII and DII were net buyers. FII net bought for 2,360 crore rupees and DII net bought for 2,500 crore rupees. So in the cash market, both pumped near 5,000 crore rupees. But on the contrary, in the index option market, stock option market and stock future market, altogether, FII net sold for 8,500 crore rupees. Overall, altogether, on last Friday in the Indian market, actually FII net sold for near 5,000 crore rupees. So those were the quick takeaway from the Indian market. Then coming to US market, on the Thursday night after the market close, one of the FOMC member, New York Fed President, mentioned that there was a strong case for 50 basis point rate cut, which in turn on Friday night, CME Fed Watch tool increased the 50 basis point rate cut probability to 50% from below 20% a day before. So at present in the CME Fed Watch tool, it's showing both 25 basis point rate cut probability and 50 basis point rate cut probability both got the chance of 50%, which in turn increases the US market on last Friday. Dow Jones increased 0.72%, S&P 500 up by 0.54% and Nasdaq also up by 0.65%, and in line with that, VIX decreased 3% from from above 17 moved near to 16.5. Then coming to Indian ADR, it didn't follow the US market, rather it just followed the Friday's Indian market. So Wipro alone increased substantially like 3% due to their New York airport project. Other than that, all either flat or marginally down. Arbitrage wise, for now only HDFC Bank ADR indicating 1% positive. All other four either minus 0.5% or positive 0.5%. In case of GIFT Nifty, on Saturday morning it closed at 25,411, equating it with the Friday spot market. It's indicating flat to positive opening. So that's what happened on Friday and Saturday morning. Before going to Indian sector stock specific, I quickly like to highlight one very important thing. On coming Wednesday this week, very important, US Fed FOMC meeting for interest rate decision is due. At present, market partially factored for the 50 basis point rate cut, but by chance Fed didn't perform 50 basis point, rather they just performed 25 basis point alone, means then I believe it's negative for the market. So I expect till that time market to be range bound. Let's see. But it's just my opinion, I can be wrong. Now let's move to India sector and stock specific. First, as I said earlier, FMCG last week increased 3%. Please keep that in mind. Now, during the weekend, Indian government did two things. One, Indian government lowered their traders wheat stock limit holding to 2000 metric ton from earlier 3000 metric ton. This now increased the wheat supply into the market. As a consequence, expects the price to drop. But on the other hand, Indian government increased the edible oil import tax by 20%. Here clearly, more wheat supply to the market is positive for FMCG. At the same time, increasing the edible oil import tax is negative. Either way, today again FMCG will be on focus. Similarly, Indian government removed the basmati rice floor price export. So I think it's positive for rice export related stocks. Then finally, Adani Power and Adani Green together won the combined bid to supply 6,600 megawatt of power to Maharashtra state for 25 years. It's a new contract agreement. Ideally, it's positive for both the stocks. Let's see how market react for it. As a summary, US market closed positive, but for now it looks Indian market is in the range bound and indicating flat to positive opening. About the things to look out, Japan and China market will be on holiday today, so no Asian market influence. Then at 2:30 p.m. Europe's wage increase report, like how much percentage of wage on an average increase across Eurozone area compared to a year ago. Then in the aftermarket hours, India's trade data and New York manufacturing index are some of the items we need to keep an eye out today. Coming to technical, last Friday Nifty opened positive at 25,430 mark but failed to cross its opening level and remained within the range of its opening hour. Thus on the daily chart, Nifty formed a bearish candle with minor lower shadow. But on the weekly basis, it formed a bullish engulfing candle. Hence now Nifty has to hold above 25,350 for an up move towards 25,500, then 25,750 zone. Whereas on the support case, it have now shifted higher to 25,250, then 25,100 zone. In case of Bank Nifty, similar to Nifty, it also opened 180 points gap up and remained range bound and closed at near 51,940. Thus on the daily chart, Bank Nifty formed a doji candlestick pattern indicating indecisiveness. Here last Friday, Bank Nifty outperformed Nifty and thus broke above the previous day high, and hence it had a positive crossover in daily and hourly momentum indicator, which all supports the further up move. For now, 52,000 level is acting as a stiff resistance and a move beyond it could lead to a rally towards 52,500 to 52,600. Support zone is at 51,500 to 51,400. On options front, the maximum call option open interest is at 26,000, then 25,400 strike, while maximum put option open interest is at 25,000, then 24,500 strike. New call option rating is at 26,000, then 25,350 strike, while new put option rating is at 25,300, then 24,900 strike. Hence for now, options data suggest a broader trading range in between 24,900 to 25,800 zone, while an immediate range between 25,200 to 25,600 level. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so to help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.